Good morning, everybody. Welcome to the Flow Show, Tuesday, 11th of February. Bit of a quieter morning, but a bit of squawking and stuff going on nonetheless. Hope you're all doing well this morning. Morning, Kate.
Morning, Ryan. Morning, everybody. Have a great day waiting for comments all around because I don't think that on the real data plan we're going to have much to stick our teeth in today.
No, absolutely. Very quiet data calendar today. And yeah, it's going to be headline ping pong today, I think, and not of the good kind, which we'll get to that shortly. Right, let's kick things off. Japan. Mr. Ishiba seems to be doing okay. Oh, why was my mouse not working? There we go. Mr. Ishiba seems to be doing okay because his cabinet approval rating has risen 5 points to 44% in last week's poll. That's the highest since October. So I think going okay over there. You may remember this Norway CPI yesterday coming in a little bit hotter than they would like. Well, today they've had GDP coming in a little bit worse than they'd like. Quarter on quarter GDP down 0.4% for the mainland. Overall GDP down 0.6%. So if they had a reason not to look at cuts in a greater detail yesterday, they've got reason to look at them in greater detail today. We've had Bank of England's man out overnight and 20 times this morning already, explaining why she voted for a 50 basis point cut at the last BOE meeting. She's one of the big hawks, and it was a very, very shocking turn, her voting for a cut at the first instance and then for a 50 at the second instance. Anyway, her reason for doing so is pretty much that she's changed her mind on everything. Inflation and the economy. She says inflation has become less of a threat as the weaker jobs market points to weaker corporate pricing power. And that's especially prevalent, or is going to be prevalent, in wages, i.e. she sees inflation coming down quickly to the 2% mark, hence her call for a 50 cut. However, she said, or it was indicated, she indicated that a 50 pip would have been a bit of a one-off, because she would want to keep restrictiveness in place and a higher long-term bank rate further out. She said her active rate policy does not mean cut. So it's a bit of a one-off easing and then back to keeping rates restrictive for the foreseeable. So overall, yeah, a bit of a change of mind. She's sort of come around to a bit of line of thinking that I've been talking about, that, weaker employment market, weaker economy overall just saps the price power out of firms, and that it could lead to price cutting more than keep adding prices on, and so a quicker path to inflation. However, she's worried about those second round effects potentially happening, which then begs the question, why vote for a 50? Because that can bring inflation with it. But overall, bit of a messy one. But she changed her mind and she hasn't turned into a dove all of a sudden. Any thoughts on that, Kay?
She isn't the dove now, but she calls herself an activist central banker. I find the term quite funny. First of all, for a central banker, because doesn't that go squarely against what they should be? Central bankers, non-activists, but rather reactivists, and trying to be good mothers and fathers to the country's monetary policy and money flows. Yeah, obviously we talked about her surprise change, but then she is coming back a little bit on that by adding that she wants to remain restrictive. So I guess that's what the most we can expect from her now. The thing is now, it did throw a bit of a ball or whatever in the sandbox, because if she would have wanted to do a 50, how many of the Bank of England members of the MPC are on the limit border of voting for a bigger cut? So we haven't heard from all of them, but it could be that she influences the others a little in. Yeah, maybe she should have called her an influencer instead of an activist. But yeah, and that's where, for the Bank of England at least, we need to pay attention to now. For the rest, I would say, on the back of what she says as well, is back to data watching and more than anything else.
Yeah, it was actually Bailey who first used the term activist, I think late last year, saying that the bank could become more activist on rate cuts. So I don't know, they're all getting a little bit out there praying on that line of thinking. Anyway, right, moving on. ECB's Lagarde, she was speaking at a plenary session in Parliament, says the ECB's fight against inflation isn't over. Not much else more from her worth talking about. We've been focusing on US inflation expectations. The New York Fed were out with their latest 1 year survey, consumer inflation expectations. That stayed unchanged at 3%. So no ticking up there. Not much else going on. So we're straight into the politics. I love this section of the show. So we've had a bit of a clarification from the National Economic Bod Hassett, who said that Trump's weekend comments regarding irregularities in Treasury markets, because that's what was said, Treasury markets, but it referred to Treasury payments apparently, were a reference to Musk claiming that the government had made improper transfers to contractors and grant recipients. It wasn't an expression of concern about payments to bondholders. So he's one of Trump's biggest, or is his biggest economic advisor. So he's just clarifying that. Quite funny, Kate, because everyone's been scrabbling around talking about how they're going to monetize gold and this, that, and the other, and the piece I pointed to yesterday. And the reality is, it was nothing to do with that whatsoever, anyway.
Yeah. And well, and taken in the global context of things, we are going to see a lot of seesaw comments and tests, and then getting back on it, and we are going to do it in different ways. It's going to be our daily dose, I guess, of comments and what they plan to do here and there, and then on the sideline, Trump's one of his biggest advisors or colleagues now. Musk is doing other stuff. It's a bit of a cacophony. It's hard to keep up with it. Again, I think we got to get back a little bit to. Obviously, we cannot look besides it because they are influencing markets, but we need to cut the noise a little bit and see what really goes on, instead of just looking at all the plans just of what they want to do.
Yeah, I think this is yet another example of Trump trading. He came out and said something, and even when I read the comment, the first comment I read was that there were, potential legal ramifications to do with, or fraud, I think he said, in to do with bond markets. So he's come out with some comments. The market's gone off on a tangent with them. I could probably link you 10 stories all talking about how they're going to revaluate gold and whatever, which still may be in the pipeline, I don't know. But that's the market going off on a tangent, making a whole song and dance about something, and then we find out it's nothing like that whatsoever. Now, we didn't have that much of a market reaction. Well, I don't know if gold coming off overnight was in part to those comments, because it's had a bit of a poleaxing
Yeah.
since last night. So that could be one of the factors, those asset comments giving that a big knockdown. But yes, it's an example. Trump has a way of just spouting forth and engaging his brain second. And the market's going to go make moves on it. And here we are now. Gold's still up, but we're right back down again. So another example of Trump trading.
I'm going to be completely counter here. This whole gold revaluation thing. The market seems to be buying gold because they say like, okay, they're going to be buying more gold. China, by the way, is opening the door to their investors to buy more gold. So that is one of the main reasons, besides gold being a perfect hedge in my book at least, against bad things all across. But if the market is buying gold on a potential pure revaluation of the books, I I view this personally. I view this as actually potentially very counterproductive for the price of gold, because if you reval, if you, as we have been talking about with some people on in our chat, if you reval, okay, you can do swaps, you can borrow, and the accountants will find a way to reduce the debt by 800 or 850 billion dollars. But if you actually reval to then sell it out to de facto really reduce your debt, I think at one stage, I mean, the risk is there that gold actually collapses once they revalid at 2,900, because once you revalid mark to market, you're actually, and even the debt is at risk of a setback in gold more than anything else. I'm thinking about just market risks versus how you are going to make some accountancy pirouettes to bring your debt down. I think, uh, well, I mean, the market never wrong. Okay, the market is never wrong, but I use this spike in gold to really reduce my longs, because if it's only for the reval of sake that gold is going up because the people say, oh, okay, we need to have more, because then we make more money when they will reval it. I think it's the wrong strategy.
Yeah, absolutely. And as I often say, if you're changing your books through accounting smoke and mirrors, it's not a fix. It's not a permanent fix, because if you reval gold, which makes your holdings seem more, which means you've effectively got more money, you don't need as much debt. Well, if the price naturally drops in gold, then you're reversing the other way. So yeah,
Yeah, you're
it's all
actually pretty fucked to put it
exactly.
simply.
You now need the price to stay up there, so you don't risk going the other way. So yeah, it's complete cobblers. The market's made a whole big thing of it, and I don't think half the market knows what it all means anyway. Long story short, this is another Trump ism that we've had to put up with, and we'll see what happens thereafter. What we did get, though, was Mr. Trump slapping on those steel and alley tariffs with apparently no exceptions and no exemptions, and those tariffs could go higher. Well, Australian PM Albanese was first on the phone to Trump, and he said that Trump agreed as well to consider an exemption for Australia on tariffs. UK PM Starmer has apparently booked a flight over to Washington for the last week in February to go and meet Mr. Trump and talk over all that sort of stuff. A bit of a difference. The UK has come out like they did last time, and they are opposed to retaliating with tariffs of kind. They also have a bit of a proposal. It's been rumoured they've got a bit of a proposal. There's a thing going through called the security bill, which parts of which America aren't happy with. There's rumours that the UK could tie up changing parts of that bill to help them swerve tariffs in this aspect. So we'll have to see what that brings. But the UK not wanting to go up against Trump, it seems, at the moment. Across the channel, the EU, though, they got a different viewpoint. Trade Commissioner Sefcovic said they will want to go retaliate with reciprocal tariffs, and the EU will potentially look for closer relations with Gulf states, which is a bit of a nod to the energy side of things. So they're looking to go toe to toe on this. PM Trudeau was in Paris. He says our response will be firm and clear, and we will stand up for Canadian workers. Hong Kong, they're going to file a complaint to the WTO on these tariffs. So here we are, said at the top of the show, we're going to be playing headline ping pong, everyone reacting to Trump, and then no doubt we'll get the counter reaction from Trump. What else we've got going on? We've got Hamas still going on. They've apparently delayed a hostage release for Saturday until further notice. Trump says that if all hostages aren't returned by Saturday at 12 p.m, he would say that he would cancel the ceasefire. He also threatened to go, I can't remember the exact term, hell for leather, if those hostages aren't released. So we've got another weekend risk to look forward to if nothing happens until there. And then a bit of a take this comment for what you will. Mr. Trump, in a Fox interview, was asked if he saw JD Vance as a successor, which he gave a resounding no to. So let's see if Mr. Vance takes that not too kindly, but that's something going on. We know that from Trump 1.0, he had lots of bum fights with his staff and members and whatever all through his tenure. He had a bit of revolving door on his cabinet and his close aides and whatnot. And then something that was a bit amusing last night, Elon Musk got together a group of cronies who apparently have bid 97.4 billion to take control of OpenAI. Mr. Sam Altman, who owns OpenAI, responded on a tweet saying, "No thanks, but how about we buy Twitter for 9.74 billion?" To which Mr. Musk then called him a swindler and later on called him Scam Altman. So that was happening last night when I was doing the options. Much jesting amongst the rich there. That's it on headline front. To say a bit of a quiet one. Kay, anything else from you?
No, that's it. I think you covered everything, Ryan. The rest is, as we were saying earlier, noise.
Yeah, absolutely. Have we got any data at all today? No.
Small business
But we do
optimism,
have
but that's
Powell.
not going.
We do have Powell
Oh,
testimony.
yes, we have the testimony
Yeah,
starting.
which
Okay. Oh,
that
that's going to
gives.
be so nice.
Yeah, exactly. Now, for those of you who don't know, this thing usually involves Mr. Powell just reading copy and paste from the last FOMC statement and then getting quizzed by all the politicians.
Yeah.
Obviously, this is the first one since the election, so it could be interesting. We're probably going to get a lot of questions regarding what the Fed might do against trade policies and whatnot and how they might respond. So I think we might get a bit more pushing on that side of things from these politicians. And Mr. Powell will have to be at his most independent best to sail through that. Maybe he'll get some questions about whether he's going to stay in the job and, on his political leanings and Fed independence and all that sort of crap. But in terms of monetary policy speak, I don't think we've had anything that much moving in markets after the FOMC that would have him speaking about various things. So I'm not expecting too much, but we never know. You got any expectations, Kay?
There's going to be a few different people sitting there now in the committee, right? After Trump's election. Well, I would suspect so anyway. So I think the grilling may become a little harder, especially by those who want to be seen in the good light by Mr. Trump. So he's probably going to be, yeah, I mean, accused of all the wrongdoings that happened in monetary policy since Trump 1.0. So he's going to have to defend himself more than explain, I reckon. One thing, usually we have a text coming out like an hour or so before his opening statement, right? Am I right in saying that last time that thing came out right as he sat down instead of like being an hour or two ahead? I don't recall exactly.
No, I think last time it came out early. It came out like the Friday before.
Oh, okay.
If
But
I
today we
remember,
haven't had anything yet, so.
yeah, they make it up as they go along. I've got the
Hmm.
site open anyway. I can't see anything on there.
Yeah, usually if we look at it in terms of importance of events that drive markets, obviously there's always something that he can say that is going to create markets to react in some way or another. But if you look at it in importance of creating real moves or changes of trajectory or so, it has never been the case. Those meetings, okay, they have been they yeah, as I said, there have been algo bleeps or so, but in terms of him announcing something, the announcement importance of this is virtually zero. Obviously, we can never exclude anything, but it's virtually zero. So that I think is good for our audience to know before heading into a couple of hours of ping pong over him shooting that he should put two sugars in his coffee instead of one. You know.
Yeah, and got to remember it's a 2 day event. It goes up before two committees. The second one usually more boring than the first one, but yeah, look, if the door's open for when we get the release of his testimony. As I say, usually it's a carbon copy of the last FOMC statement, but any time up to an hour before he's due to sit down, it could come, or he'll just leave it and just spill it all out when he turns up. So yeah, it's going to be half hour before kids pick up, so I'm going to miss most of it, thankfully. Right, let's get rid of that. I said nothing else on. We do have a couple of Fed members later on this evening. I'm not sure what they're going to offer us that we don't already know. So let's have a look at what's going on in markets. So there's gold, as we were just speaking about. A bit of a spike up. I know Kay's got some Extinction Tech up there. For me, we're just still waiting to see. This is all just developing price action going on here. So I'm just waiting to see where the levels will show up. We might get obviously some here into the 29 figure. So we'll keep an eye on that. Overall, it's pretty quiet. One thing, and I know Blake was alluding to this yesterday on the Face show, that markets aren't moving around an awful lot on all this tariff news, which is understandable in one sense because we knew it was coming and here it is. And really, you're not going to feel the impact of all this tariff stuff until we start getting some of the hard data through. You know, is it going to cost people more to purchase goods in the US? You know, are they going to pay higher prices in the US now if they're going to be paying these 25% tariffs? Is it going to create a price falls on the other side? Because if now you're not going to sell this stuff, example, from the UK to the US, you've got to find other markets for it, and then you get a glut of other cheaper steel and alley coming in from elsewhere. So we always trade in the expectation, as you know. We've traded the expectation of tariffs. Here the tariffs are. We're not going to see the super nuts of it for probably weeks and months to come. And that's not something the market can really trade on now. So that's one reason why volatility's dropped out a bit. You know, we've really done nothing since the open on Monday, sitting in this tight formation here, euro dollar, between the zones. Nothing to write home about. Wake me up if we're moving one way or the other. The only thing I would say is, though, that the dollar is still taking a bit of a stronger lead in some of these currencies. So that's still probably the more medium-term bias is still for dollar strength. Certainly, we're not shooting up in any of these pairs still at all. The pound, that had a little walk around this morning. There were some earnings from BP as well that slightly disappointed. Looks like we got a bit of a morning reaction in euro sterling on those man comments as traders hit their desks, but that got reversed in prior comments. Again, just a bit of ranging going on. What I would say, though, is probably something like euro sterling, which I've told often is, you know, some of these crosses are good to stay out of the tariff noise, the US dollar side of things, but this might be one of those situations where you could get a reaction in euro sterling if the euro is going to go nose to nose with Trump, retaliate, so on and so forth, while the UK tries to take a more placatory role, then you could see the pound gaining here, i.e. euro sterling coming down just on that differential. So, these crosses, they may stay out the bulk of volatility, but they're not immune to some of this tariff stuff. But it's country versus the dollar, if you get my drift, in terms of this. So I would not be surprised if we get some news like that. We see euro sterling maybe heading a bit lower. I'm not expecting it to go all guns blazing down to 82s unless Europe decides to get into a real big bum fight with the US, while the UK doesn't. But that's something to keep an eye on that side. Dollar yen, that's up and down like proverbial. I won't say proverbial what. That's one for just the chat room. But we're just turning around this 152. Can't make a proper decision whether we're going to stay above it or below it for now. So we've got a little intermediate range, sort of 151-ish, 151-ish, 150-90-ish, and then up towards 152 and a half, 153s. So keep an eye on that range. Aussie Kiwi, I had a little try yesterday, shorting into the figure. That got blown out. Took all day to do it though. I think it was later in the evening when it finally went. I was expecting to see a bit of resistance coming in towards 111.40.50. Couldn't even get that high. Got close, 111.34s, I think. We'll see. If it comes back down here and starts holding this as support, then we're probably going to have a look higher. I don't know if I want to add to my core shorts. I might even think about getting out if it's not going my way, but we've got the RBA and RBNZ next week, and I might just push it to then. Just going into the Aussie dollar quickly. Again, nothing much going on. We're still knocking around this zone. We can't get through it, can't hold above it, but we're also not looking to dip very far from it. So this is really going to be, well, it's going to turn into a major pivot point. Okay, if we start to see it breaking above and holding, then that could well see it pushing on up. Maybe then we get a bit of a springboard to the 64 level. On the other side, if we start holding below, that's going to suggest we may not be done with the downside just yet. And then we keep looking at these levels once more. What else? Dollar CAD, got a bit of an itch for some sell stops below this 42, 65, 70 area, proving to be very solid. Again, ignoring the tariff threats, or the tariff action, should we say, and also the response from Trudeau, who is half out the door anyway. So we're not doing much on this one. But again, you can't get sucked into a false sense of security. Yes, mate.
I haven't followed all this whole saga from too close. Is there a timeline for him to get out the door?
I think it's June, July, maybe May. I don't know. I don't think it's too far away. I'll have to look it up.
Okay.
But yeah, I think he was going to try and hang on, unless I'm getting myself confused with France and Macron. I think he was going to try and hold on to the election in October. But obviously now he's shot himself in the foot. I think everyone's pushing for earlier elections, but I'd have to look that up.
Okay.
Yeah, it's a bit like Macron. He wants to hold on as long as possible. It just depends whether he can or not. But yeah, anyway. So that's my thoughts for dollar CAD. We're not really seeing a push up towards the top of the range, which is always possible. And last one before I bang it over to Mr. K, keep an eye on yields. We look like we're trying to base above the 450 once again. So keep an eye. That should add a little bit of influence to the US dollar side of things in terms of keeping that bullish if we continue higher. But we're probably treading a bit of water for tomorrow's CPI. Right, don't forget, if you've got any questions, chuck them in the side, please. Derej wants something on euro yen. Right,
yeah, I'll have a look at that.
Punch it over. Oh, if I can get my computer working. There we go.
Oh, right. First of all, gold. Yesterday I spoke about that. Well, I've been speaking about that already every day. So we went really close to that 1618 extension there. Broken above what a bit of a channel here that we were building up on since actually a few years. So we've broken above what, but we're back below. I think we need to. Yeah, I'm still bullish. Nothing's changed because, as I said, it's going to need to start breaking below certain levels to really turn. Because we have seen many, and this is a daily, yeah. So these are pretty big moves, but we have seen setbacks, and every time the first decent support has been holding, and we have been pushing through. So technically, this is still very bullish, but. We and I also like to listen to stories and stuff in the market. So as I said earlier on the show, if really this is buying on that reval thing, I don't think it's the right reason to do so. There are many other reasons why we should still see gold move higher, but I wouldn't think that one. So I am now starting to think that. Okay, caution. That is what I'm saying. Caution, because it could be that especially stories like that get blown out a little bit, and then the market says, "Well, geez, I've been buying gold above 2900, and now we're back at 2880. Get me out of there." And we could see a setback. I think down to mid 28s, even low 28s, without anything changing to the global picture. Okay, so I'm starting to be a bit cautious here. One other one, and finally, it reacted as I would expect on tariff risks and potential risks that it brings to growth somewhere. Silver is correcting, and because being an industrial metal, this should be going higher if the situation is rather okay. If you are like trying to create growth through several channels, then your silver is probably going to be the better instrument than gold. But for now, I wouldn't think so. And again, I would be looking. So this was the first support zone I've highlighted already a couple of times. We've been for a quick test so far, and we are not too far. So this is your 3160. I would not be surprised if this correct down to low 31s. For as long as we're capped below 32, 30, 50. I think 32, 30, 50 is probably going to be the gateway. Okay, there's this channel around 3280s, but I think if we really break above 32 and a half and hold, I think we could get back up another buck up to 33 and a half or so for a starter. Now, euro yen, let me straight away look at what comment on what Derej was saying here. Well, euro yen, oh, I had a different picture that must have been on the 4 hours. Here we go. I had this different picture. Euro yen has finally has broken and is in a retest of this 157. This is that little triangle. I think there is, if you purely look at price action that a pair is doing, it's 157. Close below, it's probably a bit negative. Close above, then perhaps some weaker shorts may try to buy back, and it's really trying to make up its mind here. Um, Level above, probably around here, that 157.90, 158. But if that would go, then I think more people will need to run for the exit, at least the short termers. Longer term. It looks to me like yeah, this down to 154 and a half, even if you look at it 155 154 and a half, 156, 154 and a half, sorry. That's a relatively decent support zone looking at it from this side. So that would be something if it broke down, because then that would mean that yen is really strengthening. I think it's going to come from the yen side, unless something really goes pear-shaped in those negotiations on tariffs, where euro should break back down, but then it's probably going to be accompanied by euro really breaking down again below those prior lows here, and going for a retest of the 102s, why not even lower? So for the euro yen to get down, if it doesn't come from the euro tariff thing, it has to come from the yen side. Okay, so then the yen side, we now have to wait, and I think we are not too far away, being mid February, we are not too far away from hearing first hints at what the um, spring wages could give in Japan. We usually have some of those unions come out with their at least their demands, and not necessarily replies from companies, but their demands. So that could be your next mover. Now that we have been trading, still trading, obviously, because the yen is a bit stronger than the rest of the currencies. The fact that Japan could be exempt of any tariffs, but once that's going to fade, that trade, we have to look at what's going to happen with the wages now. Okay, so if the wages are really good, I think we could see a next leg stronger in the yen, but that remains to be seen. Um, Next one. Yeah, I was going to show the Aussie as well, but the Kiwi is not looking as good. It's a bit at risk here. I've got really, really small that I bought the other day around where? Around here. I let the piece go. I didn't. When we had this, yeah, I think it's around. It's here that I bought. Then I let the piece go on that spike up to the figure, but it's not doing very well. So I'm not adding right now. I'm really not adding because I'm not feeling overly comfortable on the trade. Rather, in fact, I'm more than happy to let the rest go if it breaks below 25.30 here, because we could be in a bit of a test lower. Obviously, if it holds, it could just go back up to the figure. We may be forming a range here, similarly to the Aussie dollar, but Aussie dollar holding a bit better, probably also while Australia can see some exemptions of tariffs, but we are, as Brian already said, mooching around. We really need to break higher here above that 63 to continue to go, but it's holding better than the Kiwi, that is for sure. I was going to show something else, but I really forgot what it was. Oh yeah, there's a bit in the cable actually. We could be similarly to some pictures here. We that triangles are forming, and I think the low 123s are going to be important, but that's more for the intraday kind of stuff. I think more medium term, we're looking at it from a different angle, still relatively offered, I would say. The dollar in general is still holding on to gains. We are going to have to break above 124, and especially high 124s to really keep go higher in the cable. But for the time being, I'm okay to try and play this hold here. I don't think it's warranted to be too short cable just on the back of some comments or here or there. Exemptions from tariffs would be obviously a good news, as Ryan already said, for a lower euro sterling, which is for now consolidating. Anything else? It doesn't seem that you guys have too many other questions. Mary Toft, that question about international economic and market response to Musk and Young helpers seizing treasury payment systems. It's very hard to give an answer as a market to it, for as long as we don't even know whether they are going to have access to everything, whether there's going to be an uproar, whether judges are going to be booted out, or it's a fluent situation. But unless they really find some really grave reasons to come up with proofs. We know how the Trump administration and Musk can bully people as well. But I would say that if you look at it from an outside point of view, it's very hard to have a reaction on it before we know exactly what the results are going to be, and that could be weeks, if not months away. So for the time being, I would say that the international economic community, Mary, has not responded to it yet. That is where I stand. Um, doesn't Chinese tariff affect Aussie? Yes, there is, but we have seen that Australia has not only China. Okay, they are exporting stuff. By the way, they are exporting quite a bit to Japan as well. They are exporting to the US. Yes, China is a big part of their economy, but also let's not forget that they dig a lot of stuff out of the ground. By the way, gold. So one could argue that with gold shooting higher, or copper being higher, the Aussie should be supported as well. So it's a bit of a, we've been saying over the end of last year into this year, watch out for correlations because they can come and go depending on how Trump is handling the traffic lights. And we are in a situation right now where it's not 100% sure which correlation. It's not, no, 100% is far from reality. We're somewhere 50-50. Are you trading correlations, yes or no? And for the time being, I would argue it's each for oneself in to a certain extent. And with that, Ryan, back to you, mate.
Thank you very much. Yeah, just a couple of points, Marie, on the payments thing. Yeah, I don't know what it all means on the ground level, what he's got access to and whatnot. I think from a trading perspective, very loosely, the only thing you need to look at is international payments. So obviously, like most countries, the US has programs in place paying this country, that country for this, that, and the other. I think there's already one, South Africa. Trump's threatened to stop payments to South Africa or somewhere if because they're silly payments if they don't improve human rights and that sort of thing. So that's probably your only place where you might get the market looking at it. As for Dereji's comments on does Chinese tariffs affect Aussie dollar, this is a good time for you guys to get stuck into the fundamentals and start learning about this sort of thing. Get onto Google, which is probably your best resource. You've even got AI these days. Find out what China does with America. Find out what China does with Australia. Okay, first thing I did this morning was actually look at what is the UK's exports in steel to the US. And apparently the US is the second biggest steel export partner for the UK, but it's not a huge amount anyway. It's more specialised, high-grade steel for defence, for security things, and that sort of thing. So it's more of a specialised industry. So it will be impactful for the UK, hence why they will push to potentially get a deal. So look at all these things. Do a bit of Googling. Okay, China we know is a big producer of steel, but does Australia buy Chinese steel? So if China's not selling to the US because of higher tariffs, will they sell more to Australia? That's the sort of thing you've got to look at. And that's how you define what the reaction may be to tariffs by various countries. Okay, if the Aussies are big exporters to China, well then US tariffs on Chinese steel isn't going to affect Australia. Okay, that's the way you got to look at it. So the information's out there. It's not difficult to find, and that will give you a heads up in what to expect in markets potentially as well, and shape trading. That's why we have a more fundamental stance on this show to help you with that. Anyway, thank you for your questions as always. Thanks, Kay, for your analysis and your input. And yeah, we'll call it a day, and we'll see you all tomorrow. Have a good one.